Do you think crypto will find its footing at these levels? And what can we kind of make of this big slump in trading volume?
Where is it going? It's probably going to 100, then 150, then 200,000. In what period? I don't know.
First quarter of this year, we were ranging up to the $300,000 to $400,000 range. Right now, the top model is $157,000 today. Of course, it moves. I don't know if we squeeze out of this accumulation band like I'm expecting. I would say that we'll start curving upwards and we're in the $250,000 to $350,000 range. Sounds a bit ludicrous right now, but that's what the model says. If we hit it, if we hit it. Yeah, right now the big story is like, when does this accumulation band pop? It sounds almost funny, if you talk to people on crypto Twitter, because everyone's so bearish, saying we're in a bear market, and I'm like, this is a bull market. There's no mistaking this. Like, we've got X-ray vision on what the investors are doing, and it's bullish, whilst price is sliding downwards. And I think the next major event is when the fundamentals squeeze the price action, and we break out of this, what I'd call a reaccumulation band, right in the middle of a bull market, like a bearish shock that is now being shrugged off. So that's the next thing I'm looking for. And then typically, once, we usually get a few pullbacks within a bull run. This is a really weird one, a whale powered pullback. But after that, I'm really interested in seeing how the tail end of this bull market develops, because this bull market is, it's structured unlike any I've seen before. And the market of, the whole market is completely different. Oh yeah, so people like to cite that I have an opinion, like I make a prediction. All I'm doing is reading off the model, and I get the luxury of saying the target is a moving target, because the model keeps changing, because it's basically, a moving average over the market cap is what it's based on. And it's hit every top in the history of Bitcoin, 12-year history. I'm not saying it'll do it this time, because it's such a weird cycle, but that top model, and there's another model which frames the bottom, they give me an idea of where the top may be. And first quarter of this year, we were ranging up to the $300,000 to $400,000 range. Right now, the top model is $157,000 today. Of course, it moves. And so really it's looking, I don't know, if we squeeze out of this accumulation band like I'm expecting, I would say that we'll start curving upwards and we're in the $250,000 to $350,000 range. Sounds a bit ludicrous right now, but that's what the model says. If we hit it, if we hit it. Yeah, I will remember in the 3,000, 4,000 band, it broke out, and it really was a squeeze. I can't remember how the derivative setup at that point, but looking at the squeeze, it looked like it was primed to pump upwards if it broke resistance. Presently, there's very, very little interest compared to, open interest is very low. The number of contracts in the system is low. So I'm not entirely sure if we'll get a squeeze, but historically we do squeeze. So squeezing meaning we get a very violent move, and this time it'll be a short squeeze because everyone's shorting, so it'll move to the upside. So I kind of expect it, but right now I'm not seeing enough open interest to see anything really very violent. But I do think you're right in that as this thing starts to pick up momentum and it shakes off all of this crazy bearishness of, not only did we have all this crappy energy fossil fuel narrative thrown at Bitcoin, but then we had on top of that China shutting down all of their mining. which will take apparently roughly 6 months for all those miners to really move that infrastructure and set it up and redeploy it. So the hash rate of the networks, I think, 40% down or something ridiculous. So there's a lot of bearishness that's been thrown on Bitcoin. It's still chugging along at, price pulled back 50%, but it's still doing well. So if we shake that out, and then we've got, you look at the picture we're seeing where we've got, sovereign wealth funds that haven't really been much of a story, but, and I'm quite interested in these non-speculative hodlers at very large scales like sovereign wealth. Like El Salvador loading up 150 million for their trust. I think Singapore loaded up on some Bitcoin, but there's a number of sovereign wealth funds that I think must be looking at accumulating. Yet, I don't think we've seen much of that yet, and I think that's a story for like the fourth quarter of this year, maybe, if it happens. And if it happens, then that's going to really change the cycle, because we have that kind of buying power on typically what we'd expect to be near the end of a bull market. We could see a really different cycle. I kind of wonder if this cycle, I'm calling it different. Like Dan Howard's calling this a super cycle. I'm thinking this might be the last cycle, meaning at this point, Bitcoin doesn't see this very strongly imprinted 4-year cycle. And we do more of a random walk, and it's highly correlated to macro. And we just random walk all the way up to $1 million.
Willy, do you think that's the top? Why $1 million? Why not 10 million or 500?
$1 million plus. I have, what is it? There's no top to Bitcoin because fiat has no bottom, was it? I think that we're the monetary base of civilization is about to be reset, more than reset, reinvented. I'm looking at this. It's like people are looking at this as reset of the long-term debt cycle. Reinventing money. Money gets reinvented every roughly 100 years, and I'm like going, well, if you look at when money was invented, that was the agrarian age, So we shifted from not trading to actually using money in agriculture and all this technological advancements, and that led to civilization. And I think this is the same thing. We're going from this kind of industrial age to a digital age, but it's a real first reinvention of money since the agrarian revolution. It's a 1 in 10,000 year event. It's not a 100-year reset. So the top on it is roughly 1-to-1 to world GDP and market cap, which is what, 100 trillion? Yeah, it's like, there was a dip. That dip was, if it was 5,000, as you quoted, that was very shortly after the miner ban in China, and presumably it made sense for miners to sell coins because some of them are getting out of the game and liquidating for real, and others are selling out to fund relocation. But after that sell-off, we're in accumulation of coins by the miners, and they're not selling. And it's very much what you see with the bottom. The strong miners are left. The strong miners being the ones that didn't get shut down by China, and so they know it's a bottom because the sale pressure is gone now. So yeah, it's and interestingly the mining. It's really weird to be looking at the mining equation in the middle of a bull market. And typically the sell pressure from miners is very, very small compared to the full force of buying of a fully unleashed Bitcoin bull market. And so we're in this kind of tentative band where we're going sideways, where it kind of does matter. But normally, back to the first conversation, there's like 300-400 metrics you can look at on chain. And mining right now is being pulled out of the toolkit, whereas normally we don't look at that much during a bull run. Very little signal because their sell pressure is so low in a bull run, but right now it's important.